You're putting your personal life, your family's future in the hands of this person. Consistency, no days off, no days off. You believe in entrepreneurship capital. It's like fundamental to who you are. Banking is a business of ideas. It's moving so fast that the AI is going to be doing all the work. And what's left is the humanity of it. I got to get this done to get back to my work, to the opposite. This is the work.
Jay, welcome to the show.
Tim, always a pleasure and an honor to be with you.
Attributes of top performing investment bankers. When you think about the top 10% of investment bankers, when you really analyze them, you just get right up to the tippy top. What do they consistently do that's different from everyone else?
I'm going to pivot that question versus what they do to who they are. Who they are. In this transactional world of ours, character, ethics, integrity, fiduciary mindset are both eternal and more relevant and important than ever. The best performing investment bankers have timeless qualities. They're trusted advisors in the absolute best sense. They've got unwavering ethics. And this is a really important point in this age of what's in it for me. Genuine client first mindsets and behavior. What is a client? Latin for someone under your care. They have the mindset, my client is somebody that I'm responsible for. That's who they are, is where everything starts, and in many ways, everything ends.
Okay, so just to paraphrase that, the top 10% of bankers that you've met, and you've met a lot of them, and you have hundreds of them on your platform, you're saying that it's more about who they are, more about their characteristics versus the specifics of their work habits. And we will talk about the specifics of their work habits, but really as a starters, it's who they are. And you mentioned character, and character sometimes is one of those hard to define words. So how would you define character?
Well, so investment banking is, what are we talking about here? We're talking about being the advisor on the sale of a business, the most important event in any company, the one that has the most profound importance is, and for many, for family businesses, a once in multiple generation event.
That's true.
So you're putting your professional life in the hands of a person. And in many ways, you're putting your personal life, your family's future in the hands of this person. And so the quality that comes across immediately of the top performing investment bankers, it's someone that you would trust them with your life. You trust them with your loved one's life. And that's when you see it. And the bankers that have it, first of all, it comes from, you got to live some life. Okay. That's why, there is a certain dynamic that, you're born with a certain amount of character, then you develop it through experience. So that kind of person, I'm not saying it can't be somebody that's 25 years old, but usually it's someone that's lived life, gets it, and is just at the highest level of reliability, of trustworthiness.
Yeah, that's a good point, because it is their number one asset. It is their baby. And when you said their loved ones, I mean, a lot of times these business owners have loved ones that work in the business because they've worked with them side by side for 20, 30 plus years. So, it's like family. So if we shift over a little bit just to performance, the performance side of what makes a successful banker, the attributes, there's relationship management, which is important, right? Because you can't just call it in. There's technical skill. You have to know the dynamics. We have some savvy bankers on our team, and you can sit here and have a very, very deep, in-depth conversation about every nuance of brokering a business. There's judgment. Again, you mentioned some of the soft skills, like the characteristic side. What would you say sits at the top outside of just the character side when we're talking about skills, maybe?
Well, I'm a guy that knows the independent investment banker, the boutique investment banker. So these are the folks that are running their own small 1-person, 2-person, 3-person, 4-person banking boutiques, shops. That's the arena in which we primarily operate. And so for them is an enormous work ethic in an independent environment. So, when you're working on Wall Street and you have a structure, where you've got managing directors, directors, associates, analysts, and there's a structure of work ethic. Obviously, and you've got a winnowing where you kind of have levels, and there's a certain number of analysts, and then there's weeding out to associates and weeding out to vice presidents and directors and managing directors. So we kind of get the managing director. It's the person that has performed best out of, let's say, 100 that started as an analyst.
Yeah.
So the best bankers, when they come in an independent environment, when nobody's looking over their shoulders, okay,
Right.
that's to the degree they can maintain that work ethic of enormously long hours, as would be you would see in a Wall Street banker, consistency,
Mm-hmm.
no days off, no days off, personal accountability, and that almost a analyst work ethic plus an independent autonomy. So that's a basic. That's a base. So,
Yeah.
by the way, which goes hand in hand with character, because it's hard to have character without. It's possible, but it's pretty rare. When you have enormous character, it does translate into enormous work ethic.
Yeah. I mean, you see this a lot with, let's say, real estate agents, right? They go out on their own and they get licensed, and the next thing, the phone is not ringing, and they're floundering, and it's a little too late. So, what would be your message, your call to action to anyone that's considering becoming a banker? Like, what would you caution them before they get into it?
Okay, so now we talk about what all investment bankers, in the same way all real estate agents, they want the dream listing, right?
Hmm.
The
Yeah.
very the high price property at a sellable price, right? So investment bankers looking for that company that is very attractive to either a buyer or an investor, and it's at a price point, a valuation that is doable in the market. So, those are going to be relatively few and far between, and those deals are going to be very, very competitive, and that's why the assessment of the client as to who to hire as their advisor, work ethic and character are going to be at the top of the list. Now, from there, a lot of patience. Um,
Hmm.
this business is one that in some ways you get paid 1 or 2 days a year because it's
Yeah.
transactional based, and it's incredibly exciting. And I've been very fortunate in where I sit to see bankers have mid seven figure and in a couple of cases 8 figure paydays on a professional services transaction. So it's incredibly exciting, life changing, but it's going to happen a couple of days a year. And the other days, you got to be patient, you got to be extremely resilient, and you got to maintain that work ethic, and you know stick to your beliefs of uh, of a client first approach through all those days when the deals are either the mandates aren't coming in or the deals are getting delayed to close. So that idea of patience, resilience, um, is an incredibly important characteristic of somebody in this environment. Now, I wanted to add one thing to that, Tim. This is a
Hmm.
really important point. There's no way to maintain that if you don't love it. You
Yeah.
cannot,
That's a good point.
you can't, there's no way you're going to do it. You got to love it. You got to love business. You got to love
Hmm.
the strategy of business. You got to respect and get inspired by the great entrepreneurs, the great business. It's got to be like, something that you just love the work, and you love the fight, and this is something you believe in entrepreneurship capital. It's like fundamental to who you are,
Yeah.
and it's not and in some ways like way more important that you love it than you love the money, because if you get the love of it, the money will come. If you just went in for the money, and I've seen this too many times,
Hmm.
it comes through, and and the clients see it, and then you don't get the deals.
Yeah. Yeah. And we can say that's true for a lot of things.
For a lot of things. Yes.
What question do you wish people would ask you more? If you were to single out a question, which I wish people would ask me this question, they never really ask me about this when it comes to boutique investment banking.
Well, I see this a lot, and I talk to a lot of younger bankers. What you're
Hmm.
seeing now is, in the old days, the bankers would be in this apprenticeship mode for quite a period of time, 10 years plus. Now you're seeing younger bankers, folks new to the industry, going on their own right away because, they can,
Hmm.
and they're attracted by the very high, being able to basically, keep all the money, right? So I would like to see them ask more about how what can I do to be successful for my clients versus a lot of the questions about what is, you know, the questions you're asking about, and I'm turning them into saying, okay, this is about you're being successful for the client. A lot of investment bankers, because they're very ambitious, they're very motivated people, right?
Hmm.
They're money driven. So a lot of the questions about, okay, well, how am I going to be successful versus how can I want to see them ask me, how can I best serve the client? Because,
Yeah.
you know, a guy like me, between my management consulting, my investment banking experience, I've seen thousands of client engagements. So, what are the aspects of how can I be not, how can I add the most value? How can I be a positive change agent for the client? I like them
Yeah.
to be more focused on that than upon them thinking about what they need to do. Kind of getting
Yeah.
their more focused outward.
That's a good point. So let's single this out a little bit. Give me three things that they could do to be more valuable to the client from what you've seen.
I think a big one is proactivity, right? Like there
Hmm.
can be a dynamic that of getting into a little bit of a project management routine and that more off schedule, the off schedule text, the off schedule call to be more proactive versus reactive when the you know putting things on the client's plate or taking things
Hmm.
off their plate proactively. I think that's the first thing.
That's a good point.
Second thing is like the tough love, Tim. Okay, and I think it's one of the hardest things to do when you're an advisor because you're
That's
getting
good. That's a
paid.
great point.
You're getting paid. You like getting paid, especially when they're retained relationships. And so there's a tendency to glad handle, tell people what they want to hear,
Yeah.
and not be. This is what it comes. The word right there is you got to be authentic. Okay, you got to be well informed. You don't want to be necessarily, you don't want to be saying things cavalierly off the cuff. Get informed and then make recommendations that are authentic, whether the client's going to like it or not.
So we have being proactive, having tough love slash being authentic. What's a third?
I mean, this is a hard one because you only, it's like, they say work hard, not smart, work smart, not hard. I would work smarter, but if I'm pretty dumb, so I'm working as smart as I can, right? But I think a big thing is creativity. A gentleman who mentored me in the business said, never forget, banking is a business of ideas. It's a business of ideas. It's deal making. So your creativity, like come up with some different ideas that are, you know, as you and I well know, we work with some clients that are doing some things that are very much, defined within a certain industry. But what are the adjacencies? What are the key skill? What are the key qualities of that business that can be pivoted into some things that are not obvious? So it's creative, which comes from a lot of experience. And if that's where the alchemy is, right? It just
Hmm.
and the deal makers they think that way, right? Like when I'm trying to think of some big combinations that happen recently that just show people thinking very, very creatively. Netflix with Universal, right? Is that I mean that's a
Warner Brothers, right?
Warner. I'm
Netflix and
sorry.
Warner Brothers.
So with
Yeah.
Warner Brothers, so that's a very creative,
Hmm.
big swing that you can question it if it makes, but it's the kind of all right.
Yeah.
That's outside the box, and that can be
Hmm.
it's risky, but it can be incredibly value accretive. At the kind of the middle market level, not a lot of that happens. It's more like vanilla. I like to see a little more
Hmm.
creativity, and if you don't have that creativity, that's where partnering comes in. You bring in some folks that have that and bring some creativity to the process.
So would you say that creativity is certainly in the top three or four attributes of elite bankers?
Creativity, it's deal making. Deal making
Hmm.
is
Filmmaking.
finding a way, right? So, a lot of times these structures involve earnouts, involved seller carrybacks on notes,
Yeah.
and just being creative in the many many aspects of a deal, um, and sometimes that uh, the original, like very very typically, let's say a company goes out for a financing and that when it becomes obvious that this company it's better as part of another business versus the owner's initial desire to raise money and grow the business themselves, or the management team just not is not in a they're not the kind of management that folks are going to entrust with, you know 20, 30, $100 million to build a business. But they do have some interesting tech, some good people, and that let's combine that business with another company. So, pivoting, and that's another form of deal making. So
Yeah.
creativity, when I'm using it in the context of deal making.
Okay. How about the other side of being creative or seeing things through the risk lens? Because bankers should be helping their clients understand the risk of an opportunity. Or, and if they're getting multiple LOIs, they're going to say, okay, well, this one has a high risk profile, this one has a lower risk profile, maybe this one pays more, this one pays less, right? How important is it that a banker thinks creatively from a risk standpoint?
That's a fantastic question, and see if I can. And this it does tie into tough love because
Mm-hmm.
human beings are incredibly risk averse personally, right? We have to be from the way we
Mm-hmm.
were evolved, right? So, uh, and so what happens is that uh, folks that are running businesses that they are making decisions very much through the personal lens of risk aversion. The business itself, we're trying to maximize expected value. And what have found throughout my career, again and again, is that businesses are, from an expected value standpoint, the decisions they're making are driven too much by personal risk bias, and they need to fight that and take more risk. So just because something is risky, they always
Mm-hmm.
say if it's a 5-to-1 shot against, but it pays off 10 or 15 or 20-to-1, it's very much worth doing. Now you got to do it in a manner that you can't risk the whole company in those 5-to-1, 10-to-1, 15-to-1 shots, but you got to be taking them. You got to be taking
Yeah.
them. So and the dirty little secret, like everybody thinks that the entrepreneurs, they're the big cowboys, they're big riskies. It's not really true. They tend to be small business people, and they're they're conservative in the best sense. They want to take care of their people. They want to meet payroll. They want to pay their rent, which is all great. But from a strategic standpoint, and part of what the good investment banker does is, hey, we got to push the risk envelope here.
Yeah.
And last point on that, now more than ever, with the world has completely changed upside down in the last 3 6 months because of AI. So it's coming. It's coming for all of us, and that you don't really have a choice anymore. You got to like look at everything. It's like it's not even like this isn't even a value judgment. Like this is the way it is, and it's completely different today than it was 6 months ago because it's coming. It's all
Yeah.
coming fast.
So, staying true to our theme of the attributes of our top bankers, how important would you say it is that, because this bleeds into the risk conversation and the creative conversation, how important is it for a banker to really know their industry, to have deep niche expertise? Or do you think the generalist is better suited to succeed and make it to the top?
It's a fantastic question. Uh, the clients are gonna get to a credibility comfort level with bankers that really know their industry. So in that regard, it's incredibly important because the client, it's all, think of it as Tom Brady when he does the when he's a color commentator for the Super Bowl, right?
Mm-hmm. Right.
That he's coming
Yes,
from massive credibility. Even
absolutely.
even if, and I'm sure that if anybody's listened, and I'm a Patriots fan, but Tom Brady's not the greatest TV commentator out there, okay? Um, but he's coming from such massive credibility because he's been there that he's given Grace the benefit of the doubt
Yeah.
because he's been there. And so it is a very it's not like a whatever it is, a surface level factor. Having industry expertise gets you to a place where the client is comfortable in deferring to you, will allow you to be that trusted advisor because they think you know their industry. And it's come up a million times, right? Tim is like
Mm-hmm.
the client will say, "This guy's great. You don't understand." I mean, we've had it happen to
Yeah,
us.
yeah.
This client's great, but he don't understand the business.
Yeah.
I mean, this advisor's great, doesn't understand the business. So it's really, really important. Now, from there, in terms of the more of the functional skills of the things we've talked about, work ethic, integrity, client first, I would argue those skills are portable across various industries. That the
Mm-hmm.
functional skill sets and the above the line uh, characteristics, those in my mind are portable across industries.
Yeah.
So I would argue probably the clients probably um, I'd rather have a client go with a high integrity, ridiculously hardworking, creative deal maker that may not have done a deal in the space than somebody that's been in the space that doesn't have those characteristics.
That's a great point. That is a great point. Okay. Let's talk about mistakes because everybody's trying to avoid mistakes. And you mentioned earlier, we're all wired for self preservation. So if you're trying to make it to the top as a boutique banker here, what are the landmines? Which should you not step on? What are the common mistakes?
When you're an independent investment banker, like you're running a one-stop shop, right?
Mhm.
So you're doing, if you look at a big investment bank, they're going to have folks that are going to be performing different functions, right? They're going to have folks that
Mhm.
are going to be putting materials together. They're going to have folks that be out there winning mandates. They're going to have folks that are going to be executing, developing investor buyer lists. You're going to have folks that are going to be involved in defining the definitive agreements, interfacing with the securities counsel. So you're
Mhm.
going to have a team, right? So the independent investment banker that they're on their own. So to a degree that they're now doing it all, and then we know the law of comparative advantage that they're going to be better at some things than others, and the law of comparative advantage says that they should focus on those things that they are best at. So what I find is that there's often a desire, especially on younger bankers, they really want to get deal experience,
Mhm.
and that's great. But if they are phenomenal at relationship development, going out there and meeting people, going to conferences, utilizing their personal networks to find potential mandates, potential deals, and then at that point working with more of the executions and support skill sets, that's a better money making modality. And
Mhm.
I'd like to see the bankers kind of, in the independent environment, everybody's somewhat doing everything. So one of the big things that we're doing on the platform is trying to pair up bankers, younger bankers, older bankers, more relationship
That's great.
rainmakers with more execution, kind of plotting, pieces, as would happen in a big bank, trying to create that ad hoc, almost, hey, we're making a movie on every deal, team on each deal.
Yeah, that's important because most of us are working from home still in
Yeah,
the white collar world, right? So you don't get that networking experience, and networking events are few and far between. So I think it's important that you guys are kind of building that camaraderie, that muscle. When we talk about being highly capable as a banker, we can't say that without AI, without mentioning AI. How has AI helped you, and how would you recommend other bankers use AI to be more successful?
I was saying before, in the last 3 months, I think it's as the tools have gone to that next level, it's gone from a novelty to a massive force multiplier. So I would almost, I think we're at a place at the end of the year, it's moving so fast that the AI is going to be doing all the work.
Yeah,
All the work. It's going to be done by Tim AIG. We're not going to
yeah,
have any work to do. So what does that
yeah.
mean? Like all the analytical work, all
Mm-hmm.
the list development, materials development, PowerPoint,
Mm-hmm.
financial projections,
Sam's.
research,
Yeah.
SIMs, all that work
Mm-hmm.
is scheduling, getting buyers and the client at a meeting or a multi-person meeting, counsel, diligence, accountants, all that, which is a huge, enormous amount of cycles to do that.
Yeah.
That's all going to be done by AI. I believe it's all going to be done by the end of the year. So all going to have AI schedule needed. That's all the work that you kind of come in to do. You come in,
Yeah.
sit down, check your email,
Right.
all that is,
Technical. Yeah.
it's all going to be automated, very high agency level. So then it's like we all got to step back and say, okay, so what am I going to do? And again, what's left
That's a
is
very important question.
what's left. And
Yeah.
by the way, and what's left is the humanity of it all, right? So
It goes back
the,
to the top.
it comes back to the
Mm-hmm.
humanity. So
Mm-hmm.
the AI, it's not it cannot propel. It's not a change agent. Human beings are change agents. We're three-dimensional hunter-gatherers. So that all that's left, which I actually think is phenomenal. I think we're all
Mm-hmm.
going to be freed up from work, and we're going to be able to do something that is a tremendous correlated with happiness, which is relationships.
Yeah.
So building fantastic relationships, like that's if you look at probably the number one next to health, right? After
Yeah.
health, the number one factor that drives human happiness is the quality of their relationships. So it's becoming a, everything's about relationship every day, relationships. I think it's a potential utopia. I mean, so what does that look like? I mean, for me, it means more lunches, more
Hmm.
conferences, more time on the golf course,
Yep.
more just picking up the phone, talking to people, video calls. That's and leaning into it and not see and getting and switching it from saying, okay, this is something that I got to get this done to get back to my work, to the opposite. This is the work.
Yeah. It's a great point. That's a great point, and it's a great way to round out this conversation about what elite investment bankers do, the attributes of those that make it to the top. I'll end it with this question: if Jay Turo was starting over again, let's say you're walking down the street and you see a young 20-something-year-old Mr. Turo, you walk up to him, and what do you tell him? If he's interested in getting into this business, what do you tell that young man?
Well, I'm going to piggyback on what I just said that the relationship is, lean into your relationships. It takes time and real effort to build relationships. And so in your 20s, it's a phenomenal time to build relationships. You got a lot of energy. Oftentimes you don't have a family. So lean into those relationships and find that place. I think one thing that I did and a lot of us did, and we still like to do, is it's a little bit of an old school thing. We would have a clear delineation between our personal life and our professional life.
Hmm.
And I think that has to, I think we have to kind of, if I was younger, to step outside of that. And from a very young age, the personal is the professional is personal, building personal relationships, being comfortable with personal conversations, and then
Yeah.
pivoting them to business and professional connections. Um,
Yeah.
and luckily you have two teenage sons. I have two teenage sons.
Hmm.
I'm I'm really with these guys. I mean, my their whole career is going to be. I mean, this is it, right? I mean,
Yeah.
they're clearly going to be in a full AI agent world, so they ain't going to be doing any work, for better or
Yeah.
for worse.
Is there any question I should have asked you that I didn't?
Well, maybe just about what makes GT Securities. What is it about us that is the secret sauce? Our goal is to it's a real partnership mindset that this is we're all in this together. So the partnership is with us as the platform, with the bankers as the independent financial services industry banking entrepreneurs, and then the clients. So
Hmm.
you look at the firm. There's an in-house team. There's 250 bankers. There's 250 bankers. There's a couple thousand clients on the platform, and it's like okay, me sitting at it, I'm like, hey, the goal is for everybody to win. Everybody to win. So the enemy is the null set, and the null set is nothing happens. So the client, when nothing happens, the client, everybody, like it's like the hero's adventure. Nothing happens.
Yeah.
Like the call to adventure, a deal has to happen, and that's kind of the,
Hmm.
the ethos we have, and doing so in a way that is risk managed, and is built on those factors I started with: ethics, integrity, and putting the client first.
Yeah. I think that's brilliant. So thanks for the time. If you're new, please like, comment, subscribe down below. We'll have Jay's contact information. If you're an aspiring investment banker, a boutique investment banker, a successful investment banker, and you're looking for a better experience, a better platform, reach out to Jay and I'll tell you all about it. Thanks, Jay.
Tim, you're the best. Thank you, Tim.